7 days until silver price reverses course. This is the worst hit of the year. This is the economic indicator we need to be looking at because silver price follows a pattern. And when you understand that pattern, you can determine where the price of silver is headed. I'm going to break this down because I want you to be prepared. When this comes out in 7 days, you're going to be walking into something that you didn't see coming. Listen close. I want you to be prepared for this. The Survey of Consumer Expectations is coming out. And this is from NewYorkFed.org. And it says, Survey of Consumer Expectations. This explains a bit of what this data is. It says, inflation expectations rise at short and long-term horizons. It says, median 1 year ahead inflation expectations increased to 3.3% from 3%, according to the April Survey of Consumer Expectations. When we see this data and we see any moves in the data, it gives us a point to reference and it helps us understand where people are headed with their money and in turn where Wall Street's going to head and likewise where the market for silver is going. Let's keep going. This says they also increased to 2.8% from 2.6% at the 5-year ahead horizon, while decreasing to 2.8% from 2.9%. So before I get into more of these numbers, this is from Investopedia, and it really explains more about what this is. It says, what is the expectations index? The expectations index is a component of the Consumer Confidence Index, and it's published by the Conference Board. The CCI, that's what they call it, reflects consumers' short-term, that is 6 months outlook. So how people are seeing their role in the economy, how they feel, how much confidence they have in the economy, and in turn, how they see themselves spending in the next 6 months. This is so important for the price of silver because silver, just like any commodity, is based on futures. So when we look at this data, we could see where those futures investments are going. And in turn, we could see where the price of silver is moving. Check this out. This says, understanding the expectations index. The expectations index comprises exactly 60% of the overall consumer confidence index. The CCI is an average of responses to 5 survey questions, 3 of which deal with expectations over the next 6 months. The average of those 3 makes up this expectations index. So it says participants in the CCI answer questions about whether in the next 6 months they expect business conditions to be better, if they think it's going to be worse, or they think it's going to stay the same, if they believe that employment and income is expected to increase. Now, this is so important for inflation because much of inflation is in our minds. And when I say our minds, I mean as a population on this planet, we get it in our mind that prices are going to go up and therefore we expect to pay more, and then we're more ready to pay more, and we go with it. Likewise, if we are an employer and our workers expect more money, then we pay them more because we have this expectation in our mind. So it's a cycle. It's a cycle. And this data that's coming out in 7 days, this is going to show where people are headed in that mind frame. This is one of the patterns that happens with the price of silver. I've been stacking silver for years. I'm not a financial advisor. I'm just a silver stacker. I'm just like you. And if you've been stacking like me, if you've been in this silver game for years, for decades, then you know we see this all the time. The reports like this, they show us where futures are going in terms of day trading, investing. We see where that's going, and we see the price of silver move accordingly. So when this comes out 7 days from now, this is the type of data that we need to be looking at closely. If you're new to silver stacking, this is how you do it. This is how you understand where that volatile price of any metal, really gold too. This is where you understand how the volatility is moving, because Wall Street understands this even better than we do. Wall Street moves before silver does. That's one piece of the pattern. We see Wall Street knows this data is coming out, and you'll see it. Wall Street will move. When this data comes out, they'll move. Sometimes they'll move a day before, and shortly after, there'll be a lag, and silver will move as well. So this is exactly what we need to be following.